Hello everyone and welcome back to the channel, and I hope you guys are doing really great. So in my today's video, I'm going to take you through the company called EFC Limited. We'll go through their result and the main points from the con call summary. But before we get into that, right, we'll just tell you in briefly what does the company does, right? So the company is in leasing of real estate space, especially office spaces to big companies as well as to small professional services and to individuals who need it, right? So that's what they do. So majority of their revenue comes from the leasing, and they have entered into designing and build also, where they design the office spaces, does do everything for the companies. At the same time, they have gone into furniture. So what they are trying to portray themselves is, right, it's not just a company where you can companies can come and lease office spaces, but at the same time real estate as a service. So they don't just want you to give the office spaces on lease, but at the same time design and build it and provide the the furnitures also which are required for these offices. So that's what they are trying to portray themselves and build themselves as up. If you look at their recent result, right, if you look for the YOY revenue for Q4 FY26, it increased by almost around 39% to 293 crores, and PAT was up by almost 58% to 69 crores. And if you look for the whole year revenue, it increased by almost 58% to 1,037 crores, and PAT was up by almost 105% to 235 crores. And we can definitely see that the margins are also improving because they are doing the backward integration, as I told you, right? They are not just into leasing the office spaces and designing it, but at the same time they have acquired this furniture company where they manufacture their own furnitures and provide it to these offices at all. If you look at their segment wise revenue, right, for the leasing it contributed to around 52% of the revenue at around 535 crores. If you look at the YOY growth, it increased by almost 44%. And if you look at the design and build division, it contributed to around 43% of the revenue at 437 crores, which is a growth of almost 66%. And the furniture business contributed very minimal, around 5% to the revenue, around 63 crores, but had a growth of almost 202%. So this is still into, getting the capacity is getting utilized and still not into full capacity utilization. And going forward in the coming years also, it's going to provide majorly to the revenue. So these are the main thing. And if you look from the leasing perspective, which is their main bread and butter, right, from which they earn the revenue, the client concentration has come down, because if you look at FY21, the top 10 client used to contribute to around 49% of the revenue. That has now come down to almost 24% of the revenue. So this clearly shows that the management has looked forward and diversified their client base so that the concentration on specific customers have reduced. And if you look at the client base that they have, which rent their office spaces and everything, IT and related services contribute to around 34%. Business consulting and professional services provide, around 27%. Banking and financial services around 9%. Engineering and manufacturing around 11%, and others contribute for the remaining 17 and more percent, right? So this is the division. And if you look from the expansion perspective, right, as I told you, right, the company's focus is to portray themselves as a real estate as a services company. So they want to provide everything. And what the management said, that there's a strong demand, because nowadays what is happening, the companies are changing the way they have their offices. Because if you want to buy a real estates are getting expensive, and it's a capex heavy business, and to maintain it also. So what the companies are trying to do, are trying to move into this lease office. So that's why they're saying the demand is definitely there. And if you look, and I'm going to divide their growth plan for leasing, design, build, and furniture in three divisions. So if you look from the leasing perspective, the company said that they're going to add around 18,000 to 20,000 seats YOY in the coming year. And they said the future growth will come from all the region, from West, NCR, and South, 30% each from each division. And you look from the design and build perspective, the management is very confident that they're going to, grow by almost 40% for the next year, depending, on the order book that they see. And they will have an EBITDA margin of around 30% plus. And if you look from the furniture perspective, the furniture will grow at minimum 50% YOY for the next year, and the EBITDA margin will be around 25%. And the management clearly reminded, to the analysts again, why they went into this furniture, because they wanted to do the backward integration. See, you need to understand, whenever you are renting the office space, the companies have to build everything and give it to the to the companies who are renting it out, right? So sometime when you are taking the furniture, and if you're taking it from the third party or from others, right, sometimes there's a delay, it might not come in time, the margins might have a problem and everything. So that's why the company went into backward integration, so they have complete control from leasing to design and build to the to the furniture which is supplied to the offices. And that was one of the main reason that they did. And if you look at the performance of the company, I generally don't talk about share or the share prices, but even though the company is growing at such a good rate and growing and improving their margins, but if you look from the stock performance, it's been quite bad, and which is, and personally I believe one of the main reason is the dilution of equity, right? So the company is growing, and and obviously they need money. And what the company is trying to do, right, they're trying to dilute the equity in order to raise that money and not going further for, how to say, to take loan from the banks. And if you look at the last year alone, right, the equity was diluted from almost more than 20%. So the equity reserve capital was around 20, it is now around 27 crores. So which is like almost, they diluted it by almost 20%, right? And I think that is one of the main reasons, because we need to understand, when the equity is diluted, right, the earning per share automatically reduces. Even though the profit has grown by almost 105%, the EPS will never go by 105% because the number of shares have increased. I think if the company keeps on diluting this equity in the coming years, also it will be a big problem. If they are able to grow their business from the going year forward without diluting the equity, and generating internal revenue, I think that's going to be a good sign. Let's see how do they do. I'll definitely keep an eye on this company for the whole year. I'll definitely keep you guys posted. And if you like this video, please do hit like and subscribe to my channel. Thank you and God bless you.